June 25th is fast approaching. Let's break down the capital gains inclusion rate increase for the everyday Canadian. Corporations, trusts, estates, we're going to forget about you because any capital gain as of June 25th will be subject to this new rate and you'll have to plan accordingly. But for the everyday Canadian, the big example I see is the family cottage, right? The cabin that's been in the family for an entire generation and has gained substantial value because of land properties in Canada. So what do we do? Well, first of all, it's only amounts over 250 grand, right? That's the only amount that's gonna be subject to the new rate. And if you are realizing a sale of something like that, you're very likely gonna be in the highest marginal tax bracket for that taxation year, which means that on the amount over 250 grand, the tax you're looking at paying is about 9%. So that's what you gotta factor in. Do I wanna pay 9% more after June 25th on that excess amount, or do I realize it now? You don't actually have to sell the property to realize it now, right? You can transfer the property to a family member, to a trust, and that triggers the capital gain. The problem, of course, is that no money changes hands, so how do you pay that tax bill on April 30th, 2025? The other way to look at it is, deferring taxes is usually better because more money is working for you, right? That's why we use RSPs. We're deferring taxes to a later date. You can do the same thing. You can think of it that way anyway, where yes, it's gonna be a little bit more tax, but ultimately this property is gonna be in the family for another 10, 20 years. It's gonna gain significant wealth anyway, so we'll worry about the tax then. And you are gonna have to pay the tax eventually anyway. Maybe not you, but your estate will, your kids will. So what a solution could be is insurance. The kids, the adult kids, buy an insurance policy on the life of the cabin owner, and then when they pass, there's money, tax-free, that comes in to cover whatever the capital gains tax would be. So that's a solution to the problem. But ultimately, talk to your tax advisor, your financial advisor, your accountant to figure out the best solution, because everyone's situation is unique, different, and one way might benefit someone better than the other.